Yes.
So we are doing which paper? May-June 2023, paper 31 for ratio analysis. We'll read the question. After reading the question, if they don't give us figures directly, that means they are going to give us ratios, and with the help of ratios, we will have to find out the missing information. Let's see,
Right.
this for the year ended 31st December 2022. Yeah, you were telling something. Tell me.
Miss, so like we just do the questions, yeah?
Yeah, we will do the question check, but first we will read. I have revenue. I have purchases. All revenue is credit. All purchases is credit. You have non-current assets turnover. Non-current asset turnover ratio. Can you give me the formula for non-current asset turnover?
It is revenue by total net book value of non-current liability.
So it is net revenue by total net book value. Can you write it along with me? Of non-current assets. So what is a non-current asset turnover ratio? If you see, what is it?
Miss, it's net revenue by net book value of non-current assets.
1.6 times. Are you with me?
Yeah, miss, I'm right here.
Okay.
1.6 times the non-current asset.
What is net revenue?
825,000.
So what will you get over here? Net book value
Net book value of
of
non-current assets.
non-current assets. So if I cross multiply, so net book value of non-current assets will become how much?
125, I mean 825 into 1.6 times.
Divided by
Divided by
1.6.
1.6.
So how much will
Yeah,
this become?
miss, let me just calculate it.
Yeah.
$825. It's hold on.
Yeah, tell me.
It's 515,625.
515,625.
Yeah.
So net book value of your non-current assets will become 515,625. So I have my non-current assets as 515,625. Are you with me?
Yeah, miss.
Now you have interim dividend paid per share. So that is 0.3.
Yeah.
You have proposed dividend as 0.15. You have gross profit margin as 48%.
Mm-hmm.
Okay. You have dividend yield. What is your dividend yield? 4%.
4%.
Can you give me the formula for dividend yield?
Yeah, miss, just a second.
So dividend yield formula is?
Miss, the dividend yield formula, hold on.
It is annual ordinary dividend per share
Mm-hmm.
divided
Miss,
by
yeah,
the market
that
price.
ordinary dividend per share by market price per share.
So dividend yield is how much? What is
Or
dividend yield? 4%.
4% by market price per share.
Sorry. Annual ordinary dividend is how much?
Miss, annual ordinary dividend is hold on one second.
So I could say this is 0.3 is interim dividend and
Mm-hmm.
0.15 is final dividend.
Yeah, miss.
Yeah.
Yeah, so the total will be 0.45.
So divided by market price per share. So can you give me the market price per share?
0.45 divided by 4%.
Hmm.
Let me just calculate that.
Can I say it is $11.25?
Yeah. Miss, how do you get 11.25?
0.45 divided by 4%.
Right.
Yeah,
Yeah, miss.
yeah, sure. So I got market price per share is $11.25. Now the
Yeah,
next thing that they have given me is what? They've given me the price earnings ratio.
yeah,
Yeah,
miss. Yeah.
the formula for price earning ratio.
Price divided market price per share divided by earnings per share.
Earnings per share. So price earning ratio is how much? 18.
Yeah, miss.
Market price per share is how much? You just found out, right?
Yeah, 11.25.
Okay. So now you will get your earnings per share. So your earnings per share will be $11.25 on 18. So your earnings per share will
$0.625.
$0.625. So your earnings per share is equal to $0.625. Are you with me?
Yeah, miss.
So you saw with the help of the formulas, we found out some missing information which will definitely be used. Even if it is not used, we will try and find out.
Yeah, miss.
Okay? Now at the year end of 31st December 2022, I have some information given. This is current
Yeah.
assets, current assets, current liability, current assets, non-current liability, and this is equity. Are you with
Yeah.
me?
Yeah.
Okay. The first question they say, state two comparisons which a business may make by using ratio to assess its performance. What comparison does a business make by using ratios?
Miss, like if the business is performing well as compared to like similar businesses in the industry.
So that is called intercompany performance, intercompany comparison.
Yeah.
What else?
Yeah, miss, like if like the business's trade receivables and trade payables are like
We see whether
um
we are earning as much as other businesses in the same industry is earning.
yeah,
So we find out the industry average.
yeah, miss.
Theories you should know like on the tip of it. So two comparisons which business makes by using ratio is your intercompany comparison, your industry average. You could also say we try to see the trend of our earnings.
Yeah,
Trend
miss.
analysis. Tell me what is net assets? What do you mean by net assets?
Miss, net assets are like total assets of the business.
Hmm.
They include like whatever current and non-current assets the business owns.
So all assets minus all outside liabilities.
Yeah.
So net assets on 31st of December. Come on, start with all assets that you have.
Um, Miss, we start with the non-current asset.
start with the non-current asset. What is your non-current?
The revenue divided by like
We already
1.6.
found out, right? 515.
Yeah, 515,625.
Okay. We have cash at bank.
Yes, we have cash at bank. 32,900. Wait, no, sorry.
81,000.
Yeah, sorry.
So all assets are done.
Mm-hmm.
Now minus all liabilities. So you have trade payables.
Yeah.
What else you have?
We have 6% debenture.
How much?
6% on 100,000. Let me count that.
6% debentures is 100,000.
6,000. 6,000.
You're not finding interest. You're
Oh,
finding
okay. Sorry.
not
So
just
it's 100,000 debenture.
yeah. So now what is your net assets? All assets minus all liabilities. This is becoming 584,125. Are you with me?
Yeah, miss. I got the same feeling.
Can I proceed?
Sure, miss.
Now they want us to find what? Retained earnings on the last date.
Yeah,
What
miss.
do they want us to find?
Retained earnings.
Retained earnings on the last date. How will you find the retained earnings on the last date?
Miss, we'll have to make the retained earnings column.
Your net assets is always equal to your equity.
Yeah, miss.
Your equity comprises of your ordinary share capital.
Yeah.
What else? Your ordinary share capital, your share premium,
Yeah.
and retained earnings.
Mm-hmm.
Do you know
Yeah.
your ordinary share capital?
Miss, sorry?
Do you know your ordinary share capital?
Yeah, it's $1 per share.
Your ordinary
20,000.
capital,
Yeah.
300.
20,000.
Your share premium,
Yeah, we know both of the figures.
30,000. I don't know my retained earnings, but I know my net assets was how much? You found top, right?
Yeah, we found it out before.
What is it?
584,125.
584,125. So now can you tell me what will be your
That means we only have to like subtract it. Let me just calculate it.
Yes. So can I say it is 254?
254,125.
Yes, done. So this is the retained earnings on the last date.
Yeah, miss.
Now they want retained earnings on the first date. Yeah.
Yeah, miss. So we can like start with the closing retained earnings.
Yeah, we can start with retained earnings at start.
Yeah, sorry. Yeah.
You can start with retained earnings at start. You want this. You arrive
Yeah.
at retained earnings at the end.
Yeah, miss.
What are the things that happen in between?
Miss, the dividend.
Sorry,
The dividend.
minus dividend paid.
Yeah. And
Add profit for the year.
profit. Yeah. And if there's like any transfer.
Yeah, I don't see any transfer to reserves.
Yeah, there's no transfer.
Transfer to reserves. Do you see any transfer to reserves?
No, miss. No, miss. There's no transfer.
So do you know your retained earnings at the end?
Yeah, we know it. 254. Oh no. And yeah, 254,125.
Retained earnings at start you need to find.
Yeah.
Do you know dividend paid?
dividend paid, yeah, 300,000 and the interim dividend of 0.30.
So dividend paid would be 300,000 shares
Yeah,
into 0.30. So it will come up to
that's 90,000.
90,000. Now I have two missing figures. One is profit for the year.
Yeah,
One is profit for the year and one is retained earnings. Yeah, at the
yeah,
start. The retained
yeah,
earnings at the start, they have already asked me to find out.
yeah, right.
Retained earnings at the start, they have already asked me to find out. That means I have to find out the profit for the year.
Yeah,
How do I find out the profit for the year? Let's see
miss, yeah,
the missing information that we had.
yeah,
We had three missing information. One is the non-current assets. We have used the non-current assets. Yeah,
yeah, miss, we did.
yeah. We had market price per share that we used to find out the earning per share. Are you with me?
Yeah, miss,
Okay. That means we have to do something with the earning per share to find out profit for the year.
yeah, miss, we have to use it.
So what do you mean by earning per share? What is the meaning of earning per share?
Mr. Earning per share is basically like how much money you get per share. It's found out by like using profit for the year divided by number of issued ordinary shares.
For earning per share, it is profit for the year divided by number of shares issued.
Yeah, miss, that's the formula.
What is the number of shares that is issued?
300,000.
So 300,000. So 0.625 into 300,000 would give me the profit for the year.
Yeah, miss.
Hmm. So what is the profit for the year?
187,500.
187,500. Now with the help of this, can you find out the retained earnings at the start?
Yeah, miss, we can.
Just go reverse. We will
Miss, yeah,
do 125 minus 187,500. No, yeah, minus 187,500 and plus 90,000.
yeah, miss. The total comes to 156,625.
Then you got the retained earnings at the start. Now, working capital cycle. Round
Yeah,
out
miss.
the component to the next day. What is the formula for working capital cycle?
Miss, yeah, the working capital cycle is trade receivable turnover um plus inventory turnover minus trade payable turnover.
Plus inventory turnover minus trade payable turnover.
Yes.
What is the formula for trade receivable turnover? So this I will find out from working note 1, this working note 2, and this working note 3. So what is the formula
Yes.
for trade receivable turnover?
Trade receivable by credit sales into 365.
So trade receivables by credit sales into 365. What is your
Yeah.
trade receivables?
76,400.
Credit sales?
825,000.
Hmm?
825,000.
So your trade receivable turnover will become how much?
Miss, let me calculate that.
Can I say it is 34 days?
34 days, yeah.
Working note number 2. Inventory turnover ratio.
Yeah, miss. Average inventory by cost of sales into 365.
Inventory turnover ratio is average inventory by cost of sales. That's it. Not into 360, into 365.
Miss, yeah, we need 365 for days.
Now let's talk about inventories.
Miss, how do we find out average inventory?
Let's do the cost of sales. If we have cost of sales, we will have opening and closing inventory. And I think I have the closing inventory.
Yeah, we have the closing.
We have the closing inventory. Come on, let's find out cost of sales. Can I say revenue minus cost of sales gives me gross profit?
Yeah, Miss, it does.
Revenue is how much?
825,000.
Cost of sales, I don't know. But I would say my gross profit is 48% of the revenue because it is margin.
Yeah, Miss.
Margin is
Revenue.
on sales. Yeah. So 48% of 825 is how much?
396,000.
396,000. Are you sure?
Yeah, Miss, I calculated it.
Okay. So what will the cost of sales be?
It's the difference in between.
So give me the amount.
429.
So my cost of sales will be 429,000. So I would say I know my cost of sales is 429,000. Are you with me?
Yeah, Miss.
Now I know my cost of sales is how much?
429,000.
What is the formula for cost of sales?
Opening inventory, add purchases minus purchase returns.
Opening at purchases minus closing. Are you with me?
Yeah, Miss.
Cost of sales is how much?
Cost of sales is 429,000.
Okay. Opening inventory, I do not know.
We have purchases.
Purchases is how much?
405,000.
Closing inventory is how much?
44,000.
So my opening inventory would be 429,000 minus 405,000. Add 44,000.
68,000.
Hmm?
68,000.
So opening inventory is how much? 68,000. Are you with me?
Yeah, Miss.
So now I have my opening inventory. I have my
Yeah.
closing inventory. Are you with me?
Yeah, Miss.
Come on. Average inventory. Opening is 68,000.
56,000.
Closing is 44,000. Divided by 2, 56,000. With me?
Yeah, Miss.
So give me inventory turnover ratio.
48 days.
Inventory turnover ratio is 48 days. So this was 34 days. 48 days. Come on, trade payable turnover ratio.
8 payable by credit sales into 365.
Trade payables is how much? 30.
It's 39, 32,900.
Credit purchases is
405,000.
into 365.
Must have to calculate it.
30 days.
Yeah, Mr. 30 days.
So what is your working capital cycle ratio?
It'll be 34 days plus 48 days minus 30 days.
So it will become how much?
52 days.
Yeah. Then
Yeah,
it's good or bad?
it's good. Oh, this working capital cycle. Um,
You are in all taking 40, 50, 70, 8, 78, 82 days to receive payment,
that's bad.
but you're paying in 30 days. Okay, fine.
Miss, it's bad. Yeah,
Read the next question. Gearing ratio.
yeah, miss.
What is the formula for gearing ratio?
Miss, it's total debt by total capital employed
Cost capital
by total
by
capital.
total capital. What is your fixed cost capital?
Miss the capital.
Ventures that I see which carries a fixed cost of 6%.
Yeah, miss.
So your fixed cost capital is 100,000. What is
Yeah,
your
miss.
total capital? Total capital means your non-current liability plus your equity.
Yeah,
Yeah, come
yeah,
on.
miss. Right.
What is your non-current liability? 100,000
Plus equity. Yeah, miss.
equity
It's
how much?
100,000 plus equity.
What is equity?
584, 125.
584, 125. So what is your gearing?
Miss, hold on. I have to just calculate it.
It's 14.62%.
Yeah, yeah, that's it. 14.62.
Go to the next question. Read the question, please.
BPLC, a major competitor, has a working capital cycle which is 5 days shorter than that of ZPLC. Advise the directors of ZPLC whether or not they should be concerned about the company's working capital cycle.
You have to advise the director of ZPLC that they should be concerned about their working capital cycle or no, because their competitor has 5 days shorter period of working capital.
Yes.
Come on, what advice will you give? For ZPLC, you have to
Mm-hmm.
give 2 points that they should be concerned, and
Yes.
2 points that why they should not be concerned, and 1 mark for advice.
Yes.
They should be concerned because it takes longer time to convert working capital into cash.
Mm-hmm.
Also, ZPLC is holding too much of inventory. See, 44,000. It's almost 1.5 times of the trade receivables.
Yes.
And ZPLC is not good in collecting money from the trade receivables because they're taking so much of time. 34 days time period they're taking to collect money. And they're paying very soon. Yeah?
Yeah, that's true.
So they should be concerned. Why they should not be concerned? Because between them and the competitor, it is the difference is not that material.
Yeah, miss.
Hmm?
Yeah, miss, right. It's only 5 days.
Because they have a different policy of credit control. So
Yeah,
what,
miss, right.
according to you, they should be concerned or not?
Miss, they shouldn't because, like it says, it's not a huge difference. It's only 5 days.
They should be concerned because as it is the working capital cycle ratio period is very high. Okay, it is always good to be liquid so that you don't
Yeah,
run into insolvency. They should always be concerned.
yeah, miss.
Okay, come on, write it. Complete the sum. So this completes May, June 2023, paper 31, the latest paper. Okay.